Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Marco Pirondini, head of US Equities at Amundi US, to discuss how investors should be thinking about their portfolios and finding new opportunities. Marco, it's great to have you with us. Welcome to Trade Talks.
Thank you. Nice to be here.
You got it. Today's market backdrop is characterized by the ending of a comparatively long 12-year period of quantitative easing that's dominated the markets and created distortions in asset prices. How do you think this will impact central bank policy in keeping rates higher for longer?
Well, 12 years, 13 years of unconventional monetary policy have created a lot of distortion, not only in asset prices, but also in the real economy. The reality is that inflation is still very, very high relative to the Fed targets. Core inflation is still running really, really hot, and unemployment is exceptionally low. In a condition like that, with an economy that looks to be heading to some softer landing, although that's maybe not my core assumption, is very, very difficult to slow inflation. And the Fed is also very aware of what happened in the 70s when they have lowered the interest rates too soon, and they ultimately lost control of the monetary policy for a period. And I don't think that's what they want to have here. So the likelihood is that rates are higher for longer in order for the Fed to be able to accomplish their goals.
The opportunity set is changing across international equities. What factors are contributing to that, and where are valuations most attractive?
I think one of the distortions of this monetary policy has been an opening a huge gap, valuation gap between international equity and US equities. And part of it is justified by the better earnings performance of US equity, but the majority of it has been an increase in the differentials in the valuations. And I think that valuations are very, very important in determining future returns. So I think that now you really have an opportunity in looking also at international equity to build a more internationally diversified and better valued portfolio. Sometimes you can really buy companies that are very, very comparable, both global companies with similar returns and similar growth rates, but you have easily 20, 30, in some cases even 40% discounts when you look at international companies.
What types of companies should investors be focused on?
I think that more is particular. We always say quality. Everybody, every financial professional says always quality. I think that now quality though is more important than ever, because we are in a risky situation in the markets. We're probably towards the end of an economic cycle, and the valuations are really, really high. Margins are high. So I think it's particularly dangerous to go for companies, especially now that interest rates are growing so fast, that are too levered. So people should really look for companies with competitive, sustainable competitive advantages that are reasonably priced, trying to build a portfolio that is not particularly cyclical.
How should investors be thinking about their portfolios and finding new opportunities?
But I think that the anomalies that we have seen in the markets because of this unconventional monetary policy have fundamentally to do with international equity being so cheap relative to the US, growth to be really, really expensive, really by any historical standard relative to value, and the US equity market being concentrated in a very small number of very, very large caps. The concentration in the index is one of the highest ever. I think that building a portfolio, you should really diversify out of this risk. More international diversification, being underweight mega caps, and being tilted towards value, all not increasing your cyclical exposure.
And finally, Marco, what other trends are you finding investment opportunities in?
Well, I think that between cycles, there are a lot of very interesting underlying trends in the global economy today. It's really, there are some major changes in trends that we have seen established for 30, 40 years. For example, there is a reshoring trend that just started. It's just starting to be visible in the markets. It's highly subsidized by government policies. And this means more industrial activities at home, more construction at home, and it's a real opportunity. Especially in certain sectors, Electrification is another trend. We're trying to electrify pretty much everything to try to have less carbon intensity in the global economy. But to electrify everything from cars to everything else, we really need much bigger and better networks. And this requires a lot of investments. And I think investing in the company that provides the infrastructure for our electric future is still a very, very big opportunity. I think that in these sectors, there are still opportunities that go through the cycle, and sometimes still at very interesting prices.
All right, Marco, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you. Bye-bye.